What's going on, traders? Welcome to the channel. I'm John. That's Groot. I'm just waiting for everyone to get on board here. We trade options. All right, so we are talking big important things here today in regards to AMC. The DTCC, all these regulations have actually come through. They are in effect, I believe today is kind of the day, but in my opinion, you're going to see a trickle down effect. So we'll have to talk about that in a moment. We're going to cover the most important thing, the AMC stock squeeze. Is now a good time to buy? That's a big important question I'm sure a lot of people have. So I'm just going to lay out the data, the facts, what we're looking at, what I see on the charts, and actually my moves. Why not explain what I'm doing? And for one, let's top this off with saying it's not financial advice. Okay, I just think it's important to be transparent, explain what we see, what's going on, and why I think the data I see, I'm interpreting it in my way. Okay, so just bear that in mind. Keep your risk in check always, and I'll explain why I'm a little bit risk averse in some areas and willing to put on risk in some others. So stay with me here, but most important thing, hit the like. Even if you don't like it, hit the dislike, whatever, but we need that interaction. It will push the content out to the community so that they can better understand and be better informed and see what is going on. So like we said, today is actually Wednesday, the 24th, and we're looking at AMC. In my opinion, the market overall is a little bit on the weaker side. I'm at the SPY right now, and you can see we're hitting new highs, great, but look at how weak these bars are, and the volume is nothing. This is a 4-hour chart, and then as I go to like the Qs, NASDAQ, basically same idea here, very weak. So I'm personally staged more in the expectation of some form of a correction. It might not be massive, but it could just be a couple down days. You never know. There's no guarantees in this market, but to me, I've been staging my account accordingly. AMC wise does look strong. I love the bull flag that we're seeing. You're seeing lines everywhere. If you kind of draw a trend line here, let me pump that out there for you. You can put a trend line here between these kind of like highs and lows, and I'll do another trend line here. It's this blue line from the top and bottom. And you're going to see kind of a wedge set up where there's two scenarios. Either we're really close right here, or if you play it off of this, we still got room to run. And so I will talk about those two situations in a sec. Let's do some bookkeeping, housekeeping on the count so you can get an idea. Now on the Robinhood portfolio, things are fine. I've been slowly kind of taking out some income out of that to pay for things, for the car. Got to get the car fixed. A few things around the house, got some bills to pay. So that's good that we're seeing a good day today. Maybe I'll take out some more as we move along these next few weeks. But Mara, I did collect covered call. I have 100 shares, 200 shares actually in Mara, but I'm only doing one covered call for now, and I may leverage in another one in a few days or so. We'll just see how Mara and Bitcoin reacts. But $190. What's weird is I put this in for $250. I don't know how Robinhood filled me at $190, but I will investigate that further and not bore you to death. And then let's also talk about AMC. I just bought like 0.25 shares. Let's do this. Every down day, I'm gonna buy 0.25. I mean, it's literally a movie ticket, so actually it's probably cheaper than a movie ticket nowadays. So, but I'll buy that, and don't quote me on this, but I think every time, this isn't a guarantee, but I'm pretty confident in this. Every time you buy like a fractional share, Robinhood needs to cover that with a full share, and then obviously they can divvy out the remainder to, if someone else buys a 0.25 share and so on. So keep that in mind. That's kind of I guess a little fun thing I'm gonna do in this particular account. On the Webull side, not too bad. I started, for anyone who's not in the know, I took my $1,400 stimulus check, popped it in here, basically grew it to $5,000. I took $2,000 out a few weeks back right here, you can see, and so far I'm really light. Literally all I have is a very speculative long-term play in JetBlue. December 21st or December 17 of 2021 is when it expires, and I just bought it because it was dirt cheap. So keep that in mind. Really speculative. I put like $60 into it. It's kind of a lottery ticket if you imagine that. Now on the tasty side, let's go to that. I got a lot of movement. So Roblox, I did take the other side of the trade, so I now have an iron condor. You'll see these two puts right here. That was getting tested, and now I added to the other side. I sold a call credit spread on the 95 and 100 strike, and so we'll see how that plays out. But Roblox was really the biggest change for me. That seemed a little sketchy. AMC, I've got 400 shares basically. I got 200 in actual shares, two calls that are deep in the money, and then I actually just today did a covered call. And what I did is I went to the option chain here. You'll see all these days. This one is July 9th, expiration date 15 days away from today, and I just actually went up to the 100 strike and went $5 higher. Now what I did at this 14 delta, I sold this covered call and I'm collecting $164 of income on this trade. Now a couple things, if anyone is unfamiliar with this setup, it's kind of nice. It's technically a neutral trade, and basically what we're saying in this is, hey, if we do not go above 105 by the expiration date, I will pocket $165. And what's going to happen is, let's say the stock shoots higher. Well, that can be a bummer, especially if, say, I was closer, like in the 70s or $60 level. Then what will happen is I'll get my 100 shares actually taken away from me if someone exercises their calls. And what would happen here, though, is I would get these taken away from me, but at $105. So it's almost like I put a limit order at $105 for my shares to sell there, and I'm only doing it with one contract position. So let's say AMC does decide to soar to the moon. Well, awesome. I'll basically still have like 300 shares kind of moving with that movement higher. I'll have one that sold at 105, so I'm just like taking profits all the way up. That's kind of the move or the setup there. So not too shabby. I'm happy with that setup, and really you got to kind of collect income so you can move and make choices in the future. Like Tesla, Palantir, these are kind of long-term trades that I want to slowly build myself into, and that's what I use my income for. Now let's talk about AMC. This wedge here looking gorgeous. A few things we had talked about with this scenario is, if we're going off of this wedge, it's longer term, right? Like it doesn't come really to a tighter move until next month, maybe mid next month, maybe the end of July, who knows. Or there's another alternative where maybe we're riding this trend line higher, and you can see today like such a tight day. Look at how light the trading is and how tight the bars are. Almost no movement. Whenever you get situations like that, they're usually followed by big moves up or down. And so we got to ask ourselves, hey, what is going to happen? And this is related to the margin rule, the DTCC. If it's in effect today, there's almost like a lag effect, right? Where what's going to happen is you got to look at these books or these trades, and if there's like a reverse repo market where maybe the banks, big banks, prime brokers might owe the Fed, well, what's going to happen is those take time to get recalled. It's not instantaneous. So a lot of people are like, oh my gosh, it's going to happen today. It's going to be crazy. Everyone's seeing the same info. It's just, the question is, you got to know what the motivation is for hedge funds. Their motivation is that since people are buying a bunch of calls higher, like at the 70, 80, 100 strikes, they don't want the stock to get to that level. They want to just ride this out. So if you're like, say next week, your expiration's next week and it's way up here, well, then the goal is to like keep this sideways as much as possible to sort of bleed out positions. Now you need to keep in mind it's almost a war of attrition, because the hedge funds, and short sellers, if they're holding a short position, they're basically bleeding out every day because they have to pay a fee to borrow those shares. And so it's kind of funny. It's like, hey, the call option holders have a goal of up here, the short sellers have a goal of up here, and every time it is kind of sitting sideways, both parties are losing money. So it's a war of attrition of like who loses the most money and who kind of folds. So that is exactly what's happening. And so we're getting to this kind of weird point where we need to see what happens in this margin, because usually the expectation when you see a very bullish type of pattern like this is that we start shooting higher. And it's a coin toss. You never know. So to like be kind of naive and say, oh, I'm gonna put every working dollar I have, I'm not gonna pay rent this month, to like assume it goes higher, might be a bad move. You never know. Everyone's looking at the same thing. The news is out. So really this war of attrition, we're waiting to see if margin calls happen. We're waiting to see if, someone flinches first. That's the big question. And you're starting to see like a lot of FUD online. Like even today, it's like, oh, we're not moving higher. I'm so scared. Or when is this going to happen? Usually hedge funds are pretty notorious for spreading fear, uncertainty, and doubt into the market. And they'll make like handles. They'll go on the news. they'll kind of put these news articles out, and it kind of starts to freak people out. So you got to keep that in mind. And the reason that I'm looking at the markets and things are frothy, like we talked about with the SPY, but what's interesting, or the reason I'm most interested in this like AMC trade, is really it's different than typical human psychology. The ape movement, we're just like holding. It's hold and then don't even look at the screen. Just go to school, go work out, go do things that are fun, and then come back later, right? Whereas everyone else, typically on human psychology levels, hedge funds will try and sell, and they try and get this momentum downwards and keep it moving downwards, but none of that is happening, right? And so to me, that's like some of the most interesting things. That's why I do think there's some good potential here. But again, not financial advice. And realistically, keep your risk in check. If there's things that you are not able to sleep at night, if you're like finding yourself just always checking your phone or like not getting a good night's sleep, figure that out. Find a risk level that you're willing to part with. Find a trade that you're willing to make, and you're okay if it goes to zero, meaning you're not using money you can't afford to lose, and then go from there. That's really the move. So I hope that was helpful. Definitely don't forget to like and subscribe. We'll get this out there. But the goal on the channel is to help people secure their futures and have a good outcome in terms of providing income for themselves in the future. So I hope that's worth your time. Check out this next video.